Wei.
Hello and welcome to World Insight, coming to you live on CGTN. I'm Tian Wei. We begin with the economic impact of the coronavirus outbreak on China. First, on the Chinese equity market. Shares plunged after the market opened since the Spring Festival holiday. Industries such as construction and services took a hit. And the China Central Bank warns the virus will increase volatility and business uncertainty. The People's Bank of China, China's central bank, has injected 1.2 trillion yuan, or $170 billion into the banking system on Monday. It also lowered the interest rates on reverse repo deals by 10 basis points. Compared to the same time last year, banks now seize 900 billion yuan more of liquidity to spur economic activity. Both the Chinese central and local governments pulled out all the steps to ease economic pressures, especially on local, medium to small enterprises. Experts predict the outbreak's economic impact will be short-term, though, similar to SARS 17 years ago, and it should be limited in scope. But what exactly will be the impact from the coronavirus outbreak on the Chinese economy? For some answers, let's loop in our panelists. From Hong Kong, Hong Hao, the Managing Director and Head of Research at Bocom International. Welcome, sir. Also join us in Washington, D.C., William Li, Chief Economist of the Milken Institute. Welcome as well. Mr. Hong, I want to go to you first. The stock market, you're monitoring it every day. Tell me more about the color, from totally green to somewhat mixed on Tuesday. What's going on now? What's likely to happen next few days?
Yeah, well, I think we had a decent rebound today. Mostly the smaller caps and also the China export that was hit very hard yesterday had a really decent rebound today. I think going forward, it really depends on all sorts of policies that you mentioned that the government is pulling out to support the market and the economy, and also the outlook on the virus spread, whether we can contain it effectively and fast enough to boost up confidence in the market.
But Mr. Hong, if you have noticed, as many of us do, which is interesting because the central bank has invested already quite some cash into the overall situation. However, it's only on Tuesday, one day after the measure, that the stock market has reacted. Tell us what is going on there.
Yeah, well, I think yesterday was the first day after the New Year. The Chinese market had a chance to reflect fully what had happened, during the market closure during the Chinese festival. So I think yesterday, basically, it's a mark-to-market event. The market basically marked itself down towards the prevalent market price that is happening during this festival. And also, even though the central bank has sort of injected 1.2 trillion RMB worth of liquidity, as you said, but during the Chinese New Year, it's a traditionally season for cash demand. So, you tend to need more cash for the festival because of the hongbao and other activities. So, after the New Year, there was 1.05 trillion yuan worth of short-term credit facility that is maturing. So I think basically the 1.2 trillion is to roll over those facilities, but then, with a small liquidity injection on Tuesday.
I see. That explains somewhat the delay, quote unquote. Mr. Li, though, how is China's stock market being viewed elsewhere in the world? And how is China's economy, which has already become a big chunk of that of the world, if the stock market here turbulent goes like this, what does it mean for elsewhere? We have seen and what we're likely to see.
Well, markets in general are a balance of greed and fear. And the big plunge that we saw on Monday for China stock market was to really realign it with all the world stock markets that had plunged the week before. What we look for going forward is really where the balance of greed and fear would be, and that depends upon what the authorities tell us about the nature of the contagion of the coronavirus. One of the things that we now know is that it has high contagion but less mortality than other coronaviruses that we've seen in the past. So the markets have taken a sigh of relief thinking, well, this is just going to be a bad flu and it'll be over with maybe in the first quarter and the economic impact will be very limited. I think that complacency is a little bit premature because all the authorities, all the World Health authorities are telling us this is a new virus and we don't know what the balance of greed and fear should be because we don't know what the risks are yet. So I think the bounce back of the markets, especially the global markets that we see today, may be a little bit premature because greed has gotten ahead of fear.
But on the other hand, Mr. Li, we have witnessed some what China terms as overreaction from at least Washington about travel restrictions and flight cancellations, things like that. So how will the measures taken by the U.S. itself and other capitals themselves have an impact on the global stock market and also the global economic output, shall we say it that way? Mr. Li.
Well, I think all of the policies that have been enacted since the introduction of the coronavirus has been good public health policy because the procedures there is to contain, identify, and limit secondary infections. And that's exactly what China did in trying to isolate Wuhan and Hubei province. So the U.S., Australia, UK, France, all these countries are doing nothing more on an international scale than what China is doing on a domestic scale. So I think it's a little disingenuous for the foreign ministry to say that the U.S. is somehow promoting fear. In fact, the U.S. and the World Health Authority is trying to promote good policies. And now that we understand a little bit better about the contagion, we can revisit these containment policies. But right now, a lot of the airline cancellations are not because of U.S. policy, it's because of economics. There just aren't many people flying. So I think the economics of the situation is starting to take over now, and I think we are seeing the economic consequences of the shutdown in China starting to roll out globally.
Mr. Li's explanation exactly and beautifully reflected a complexity that we're having right now, Mr. Hong. That is, it is not only just a public health crisis, it's also mixed up with what he calls fear and greed, as well as geopolitics. At least some of the arguments could be traced back to the earlier struggles of geopolitics between the two countries. So, Mr. Hong, it seems that we're not just purely talking about the impact of the outbreak, but rather all the factors mixed right there.
Yeah, that's correct. I mean, it's very difficult to isolate, whether the market is driven by fundamental or whether the market is driven by sentiment. I think, the move yesterday, the dramatic move yesterday was indeed fundamentally driven, because one should expect, with a contagion, virus contagion effect, and also with the lockdowns, city lockdowns, it would impair, some of the GDP growth this year, especially in the first quarter. I think the first quarter number is going to be particularly ugly. But beyond that, I think, going into the trading in the next few days, I think it's more likely to be sentiment driven, and the sentiment is now likely to be driven by the outlook of liquidity and also the outlook on the virus.
And let's look at what the policymakers have been doing. I mean, internationally, international financial houses have very different forecasts on the short-term impact of the epidemic on the Chinese economy and that of the world. While Goldman Sachs predicts a dip in annual GDP growth of 1% in China and 2% around the globe, the World Bank, however, believes Chinese authorities have policy in place to respond and highlighted the fact that Beijing has announced a sizable injection of liquidity, which should help ease costs to economic growth. On the other hand, the International Monetary Fund, or the IMF, is on board with China's efforts to contain the outbreak and is confident that China's economy remains resilient. Listen to this.
We support China's efforts to respond by taking measures with all the strength of its health system, but also by the recent fiscal, monetary, and financial actions. We are confident in the resilience of China's economy. 中国加油，武汉加油。
That's Kristalina Georgieva, who is the chief of the IMF. Even she tried to speak Chinese to the Chinese audience, listening to her remarks. Go ahead, China, you're the best, something like that, if I could translate, 中国加油. So obviously, it's not just the sympathy or empathy. It's rather how we look at the world's economy as a whole. Mr. Li, let me go to you about that. People have been talking about the impact of the epidemic on China. 17 years ago, I don't know whether you remember those years very clearly, but SARS was one of the scars on the Chinese memory. We remember and we learned a lot from that outbreak of SARS. What's likely to be the impact on the economy this time compared to then?
Not only do I remember it, my daughter was born in Hong Kong right during SARS in January,
well,
so
you know
I remember
very
that time very well. And I think one of the things I should mention is that the scenario that we have in mind is one where containment is effective and the IMF hopes are fulfilled. But notice what the IMF said about policy. It's fiscal monetary policy that's going to be key to driving up the GDP of China, because monetary policy right now is flooding the market's liquidity is absolutely necessary but not sufficient. What we need to do is to get people to want to use the loans to put in place business contracts and business activity and to bolster activity once we come out of the containment phase. That is not certain yet, and I think that's where the differences in the global forecasts are based on what the effectiveness of the fiscal response is. If China just cuts taxes, I guarantee you the Chinese will just save it and there'll be nothing there. They have to go out and spend money in order to spur aggregate demand.
But that is always a very difficult question, isn't it, Mr. Hong? Particularly now, when you have an outbreak, people would tend to save money. They want to, especially the Chinese, they want to save for the rainy days. And now the rainy days already come, they want to save even more for the future rainy days, if there were any. So how to see that dilemma, Mr. Hong?
Yeah, I think the demand is simply not there. I think even before the crisis, you observe the market interest rate level has been dropping. So what that means is that the supply of liquidity is substantially larger than the demand for it, and therefore there's a downward pressure on interest rate. So even though now you pump more liquidity into the system, it's unlikely to stimulate demand for it, especially after the crisis. Now we're seeing people are being locked down in their households, and also between cities the travels are being affected as well. So I think in terms of the more effective fiscal policy, one has to recognize the limitation to it as well at this stage, because the local government, on the local government level, the debt level is very, very high. So simply some of the local government just can't afford to spend as it had been in the past decade on infrastructure spending. And also the central government need to leave out some leeway to bail out some of the local government just in case. And I think the Chinese household is highly levered as well because of the housing bubble. So I think we are in a little bit of a pickle right here, with a very low demand for liquidity, and also physical limitation is showing up as well.
Is there any prescription that we could have right now in order to spur the spending desire? Is there any, Mr. Li?
Well, I have tremendous faith that the growing middle class in China is going to be spending, whether they're at home or outside. It's just that they're spending differently. I'm very confident that people at home will be playing video games on Tencent's platforms. They'll be ordering on Alibaba's platform for goods and services. And once they get out, they'll be drinking Lunken coffee. So a year from now, I'm almost sure that if containment is successful, we are going to have the rebound in China to be very successful. And between now and then, the aggregate demand that has to be made up for, the shortfall, is going to be on the supply side. So the prescriptions that I would try to emphasize for the Chinese authorities is to ensure that supply chains are put back in place quickly, transportation is put in place for commercial traffic, so that the supply chains, not only in China, but globally, are sustained, because Hyundai has already canceled a lot of their car production because of the insufficient inventory of parts coming from China.
Yeah, but that is exactly the dilemma here, Mr. Li, because at this time, we still do not know how the virus works. And therefore, control and prevention probably is the only way that you could do in order to contain the spread of the virus and the outbreak. But that would mean people have to stay at home. transportation, service sector, travel industries, not likely to work that much, even though people could play video games at home, but they could not order as much things as they want as they used to do on the online platforms these days. So, Mr. Li, that is a dilemma. And is there a way to go around it? Could the industries, with your understanding of Chinese industries, be able to jump and to come up with something that people can, even under the current circumstances, be able to consume and willingly to consume?
One way to bolster confidence that it's safe to go out and safe to do things again and restore transportation is to have early detection. Right now, all of the emphasis in research is trying to find a fast detection device, a fast detection test to see if you have the virus or not. And that's where the policies have to be focused.
This is an interesting topic you just raised, Mr. Hong, because with the outbreak that is still going on, of course, it's too early to say what's likely to be done next after the outbreak, but certainly it brings people many more thoughts about the healthcare industry, about infrastructures for public and private hospitals, about what to do at local level and extremely grassroots level, particularly about healthcare. And all of this is related to what we are talking about, the Chinese economy. Mr. Hong, do we see at least some hint of inspiration in that regard?
I think virus outbreaks such as this, tend to have a one-off hit on the economy. I think back in 2003, 17 years ago, after the SARS epidemic, basically China spent really heavily on real estate. I think, if you look at the numbers in 2003, real estate investment hasn't gone down much, because of SARS. And also, overall, the economy, because it's less consumption driven back then, I think the manufacturing sector and also the investment in various sectors recovered very quickly. I think in large part owing to the government support. I think, 20 years later, 17 years later, when we look at this episode, I'm pretty sure that it would be gone, pretty fast. I think, once again, human being can beat the virus once again. But then, before that, I think because of the limitation on travel and also because of the quarantine, various city quarantine, so I would say that in the near term, consumption is probably going to be hit really hard.
Okay, Mr. Li, a quick response, and I have another question for you.
Yes, in fact, your question really brings up a really crucial point, which is the healthcare system in China. We know that there's a vast variation in quality of hospital care in China. The Wuhan deaths, 74% of the deaths in Wuhan is because of insufficient health care. I think they only had 110 beds to take care of the severely ill prior to that building of that huge hospital. So I think that focus on China's hospital system and healthcare system in general is absolutely vital and probably one of the best results that comes out of this virus, is to focus attention on where China is in healthcare.
What you talk about is one of those hospitals. Of course, there are many hospitals that are also facing challenges of the patients. The numbers is increasing as we speak. But on the other hand, Mr. Li, if I could ask you a question related to China and the United States, because of the earlier trade war, and later there is a phase one in which both sides have promised the other side of certain things, and both agree about these promises and timetables for these promises and mechanisms to work out these promises. Now, under extreme circumstances and conditions, which the phase one deal did mention in its script, now there is one that is going on right now in China, the outbreak of the coronavirus this time. So how will that have an impact on the phase one implementation and also on China-U.S. interactions in terms of trade, eventually its impact on Chinese economy? And Mr. Li, the question is long, but I think you know what I'm saying.
Absolutely, and phase one, I think, has that provision of reconsidering the terms and timing of the deal depending upon unusual circumstances, and clearly this qualifies. What we don't know, and I think the reason why the authorities haven't contacted each other about it, is because, as you said, we don't know how the progression of the virus will go. If it's just one quarter, I think then the provisions should stay in place. But if it's something that is much more severe, and China has difficulty restoring its supply side or restoring its demand, then of course I think the reasonable thing to do would be to renegotiate and to understand how the timetable can be accommodated for both sides, because China's demand for commodities and energy has certainly fallen off because no one is traveling and no one is using jet fuel. And I think both sides understand those circumstances. The key is to China's policies, and China's policies of containment, detection, and restoring confidence so that we can get the economic activity back up again. That timetable will dictate how the phase 1 talks will proceed.
Knock, knock the wood. We don't hope that the time of the current outbreak will continue long, because this is going to have a big impact on people's health, not just the economy, but most importantly, people's lives. Mr. Hong, go to you about that too. China's economy, big part of the global economy. If the Chinese economy slows down, we don't know what percent. What does that mean for the outcast for the rest of the world, for the next, for the rest of the year also?
Yeah. Well, I think the Chinese economy is substantially larger than 17 years ago. I think now it's like 2/3 of the U.S. GDP. It's amount to 100 trillion yuan in size. So it's very sizable. I think if the Chinese economy growth is slowed down by 1%, by the virus, I think it's going to contribute to 0.3 to 0.5% hit on the global economy. So it's very substantial, and especially at this time of the year when global growth becoming scarce, even though the U.S. is slowing down. So I think if the hit on GDP growth is one-off, then probably we see a bad quarter of GDP growth at about 4-ish% in China, and also a rippling effect on the global economy.
As we speak, factories are coming back to work after the Spring Festival, at least some of them, and also resources, particularly for dealing with the coronavirus outbreak this time, are being produced as we speak. And we hope this period will be as short as possible so that the economy will continue, and certainly it is the people's lives that we are talking about. Before we go, gentlemen, from both of you, from the economist's perspective, your analysis of the current situation and your best wishes, I guess, also. Mr. Hong, you go first.
Well, let's hope that the virus would be a one-off event, and also, because of the lessons we've learned from SARS and also from dealing with this virus, it will mean progress in the future for the Chinese healthcare industry.
Mr. Li.
Absolutely. My hopes and prayers are with the Chinese people and all the people globally who are affected by this terrible virus. And I hope that the authorities will be able to get the needed medical care in place. And to the authorities in China, my hope and prayer is that their policies, especially their policies to restore confidence in China and the Chinese people, are very effective, because the global economy, U.S. economy in particular, also depends on that.
All right. Whether confidence is coming back or not, transparency is very important, and also discussions like what we did earlier, also important worldwide. Thank you so much, William Li and Hong Hao. Really appreciate it. Be healthy.